Hello, everybody. Welcome to this webinar from Reuters Events Insurance. Today's discussion is the disruption in commercial fleets and the question of whether 2021 might be the turning point for innovation and adoption, which is a really interesting conversation, especially as we're going to dive into some of the fleet and commercial aspects of that as well. A good mixed panel of people from across personal lines, commercial lines, the industry as a whole, and some of the fleet management and technology sides. A really rich conversation today. I'm joined by Jenny Sankovsky, who's the Auto Product Strategy and Innovation Director at American Family. We got Nate Bunck, who is the Senior Treaty Underwriter in the U.S. Casualty Product Group at Swiss Re. Matteo Carbone, who's the founder and director of the IoT Insurance Observatory, and Rachel Korn, who is the CEO for the U.S. of Jooycar, their unit fleeter. I'm Bryan Falchuk. I'm the managing partner of Insurance Evolution Partners. I'll be the moderator for today's conversation. We're really going to dig into this issue a lot deeper, and it's essential for our industry that we remain innovative and engaged with our clients. We need to leverage data, deploy telematics, and especially what's become so front and center for us as an industry is providing an excellent customer experience and user experience overall. Otherwise, customers will seek alternatives because there are more and more CX first, tech savvy solutions for them to choose from. So the question is, if that is the situation, how do you deploy profitable, innovative, and safety conscious insurance and solidify your place in the market for years to come? We're going to hear from all of our expert panel, and it's really important that you use the Q&A function to ask questions. That's why we have these experts here today, is to answer your questions. So at any point throughout the discussion, please hit that Q&A button on the bottom of your screen in Zoom. Not scream in Zoom. And you can ask your question of the panel at any point, and I will keep an eye on those. And after a bit of intro, we'll go into the Q&A, but please don't hesitate. Feel free to pop that question in at any time. So with that, let me introduce each of our speakers one by one and hear some opening thoughts, and then we'll dive into the Q&A. Jenny, I want to start with you. So Jenny joins us providing a personal auto experience to this conversation as well, a space that's had a lot of UBI and connected car kind of activity going on. So Jenny, can you share some thoughts with us from your perspective at American Family?
Of course. Thank you, Bryan. Hi, everyone. I'm Jenny Sankovsky, lead strategy and innovation for American Family Insurance, and responsible for the strategy, digital innovation, research and development, telematics, usage-based insurance strategy, and all the development for the enterprise. And at present, in personal lines, we offer a few different UBI and telematics solutions to our customers. And to answer, Bryan, your question in terms of what 2021 is going to be, I think this is the year of new innovations, which will be shaped by many trends that have started emerging in 2020, primarily driven by COVID, such as we're seeing reverse urbanization, changing in mobility preferences, and certainly tremendous growth in consumer adoption of telematics offerings. Significant portion of the workforce is working remotely, which is reflected in absence of the morning commute, and claim frequencies are being down by about 20% in personal lines. Many people will intend to continue working from home in 2021. For example, according to Gartner's survey, 82% of surveying companies intend to permit remote working after COVID. People who use public transportation or ride sharing are opting into buying cars and decreasing their use of public transportation. So according to a cargurus.com survey of US car shoppers conducted this spring, 20% of those planning to buy a car in 2020 hadn't planned to do so before COVID. And 44% of those who have been using public transportation plan to decrease their use or stop entirely. So people are commuting less for work, and having more recreational trips. We're also seeing that companies report unprecedented growth in their telematics programs in personal lines. So what does it mean for the industry, and what opportunities does it present? So potentially more cars on the road, more people needing insurance on demand, as people will be traveling less for work and traveling more for leisure. With COVID, we moved from transporting people to transporting goods, from sharing a car back to renting a car, not just for a day, but for a month or longer. With maturing of the fleet, while we're seeing the aging of the current fleet, we're also seeing more and more connected cars on roads equipped with semi-autonomous and autonomous features. And lastly, consumers' desire for safety and desire for the environment conscientious transport, and also desire to share their data for additional benefits and values such as discounts, rewards, or a touchless and better service. So I'm happy to join this webinar along with this great panel to participate in the discussion.
That's great. Thank you, Jenny. And I think you paint a really interesting picture of what we might see for those of us who see what commuting looks like in the start of the day or the end of the day. Maybe more trucks and fewer people alone in their car going to or from an office. As you know, you said the 82% of companies still looking at remote work, whether COVID's here for the long haul or not. Nate, I'd love to hear your perspective from Swiss Re, which is so interesting with both an insurance and a reinsurance background, activity for the company. I'm curious what your thoughts are as we look to, especially the commercial side going forward into 2021.
Thank you, Bryan, and thank you guys for having me here. Jenny actually teed it up really well. For a lot of the reasons that she enumerated, we are seeing the beginning of a shift in terms of fewer private passenger autos on the road as COVID keeps people at home, as people become more savvy at teleworking, as businesses become more accepting of teleworkers. We are seeing some improvements, particularly around frequency for personal auto. But longer term, what's this mean for commercial auto? Like Jenny mentioned, you're seeing more vehicles on the road delivering all of those goods to our houses instead of to the offices as more and more people work at home. But we have additional pressures that we also see in the commercial auto space, and the top of my list is around social inflation, particularly its effect on severity trend. Social inflation is generally the idea that as these cases, these claims make their way through litigation, there is a greater sense of punishment on these defendants, and these are negatively impacting commercial auto, and at least one of the areas I feel like it's negatively impacting them particularly hard. What that really means is that we are looking at severity impacting combined ratios, pushing a lot of them well over 100%, which isn't really sustainable. So to your ultimate question of, is this the time for innovation in commercial auto and fleet commercial auto? It kind of has to be. We need to do something to address this. And technology, from my point of view, is the forefront of where we have some really great tools to address some of these challenges. The vehicles are being manufactured with technology that is light years ahead of where it was 5 or 10 years ago. We have integrated multi-point camera systems. We have ADAS systems that make the vehicles safer, less prone to accident. We have telematics that can pull data directly from the vehicle or smart devices in the vehicle and give us a real-time sense of how the vehicles are being driven. We have technology that is powered by various amounts of AI that can autonomously drive the vehicles, or at least provide a lot of help for those drivers. Swiss Re is looking to address this through our solutions group, and we are looking to partner with our clients, particularly those focused on commercial auto, in developing fleet telematics and fleet risk scores. In short, we know we can pull data from the drivers. We know the vehicles are safer than they were, but how can we take that and make for a fairer, more accurate score that will appropriately charge for the risk inherent in these vehicles and those fleets, both to incentivize good behavior and good vehicles and appropriately charge a rate for those that don't have those same positive traits. If you look at the ultimate kind of the holy grail in my mind is really around the final rating. Can we come up with a way to rate vehicles using traditional rating methodologies, but improved both from usage and vehicle-based models that give us a better picture of the risk that we're looking to insure? And that and a variety of other topics are what I'm looking forward to discussing later today. So thank you.
Excellent. Matteo, I feel like a lot of the points Nate was just saying kind of tee up your expertise with a focus on IoT in the insurance industry. This must be a very interesting time for you, as a lot of these things are whether added to vehicles or coming from the factory that way, enabling a totally new way of engaging with what's happening in that vehicle or to that exposure in real time. Is that what you're seeing, or what are your thoughts as we look ahead to 2021?
Let's say I'm working on the telematics insurance space for a long time. I started in 2012 advising insurers, advising telematics service providers in this domain. And honestly, what I've seen worked well is a solution that is based on an aftermarket device or an app. So honestly, I don't expect something different next year or the next 5 years. At my think tank, the IoT Insurance Observatory, it happens frequently that the members, the insurers that are members of this think tank, would like to discuss with me what they can do with an OEM. And normally I start the discussion with, it's easier to tell someone that has no direct experience on this that you are going to do something. Because it's difficult to explain why it doesn't work so well. As of today, can only grow the percentage of policies that use connected car data, because today is almost zero. But will not represent large part of the volumes of telematics in the next 5 years. If you look at what happened over the past 5 years, we have a long list of partnerships announced by insurers with OEMs. It's a great things, click-biting articles, handshaking with more members, policy sold, nothing. So someone will succeed on it. There are great teams that are working on it. I have seen details about the project that I cannot talk about because I have NDAs with all the members of my think tank. I'm pretty confident that someone of them will succeed, but will be everything, but not easy. So we are not at the moment where you are at the tipping point saying, okay, there is a transition between an aftermarket solution and the usage of OEM data. Aftermarket solution today works well. If you are an insurer that would like to exploit the value of telematics data on personal auto, on commercial auto, you can do it. If you like to bet on the usage of OEM data, you are exploring a new field. Maybe you will succeed, but you will be a pioneer.
Okay. Yeah, I know. I think that's a good point. There's definitely been a lot of announcements, including just in the past few months on the OEM side. But to your point, it's still pioneer days. Rachel, your side, you are doing some of the fleet management work. You have solutions for that. So kind of building off what Matteo said, what's your perspective on this, and where do you think things will move in 2021? And just as a quick reminder, sorry, I saw a question come through in the chat. Love the question. Just make sure if you have questions, put them in the Q&A so we can manage them there. But it's great to see questions coming in already. So Rachel, what are your thoughts as we look at 2021?
Great. Let me just start with an introduction. I'm Rachel Korn. I'm the CEO of Jooycar US. Jooycar is a global automotive telematics company headquartered in Latin America. We have over 30,000 connected vehicles. In Latin America, we operate in 4 countries with some of the largest insurance companies creating pay how you drive and pay as you drive insurance products. In the US, we launched Fleeter in October with tremendous success. This is a fleet management solution for small fleets of less than 20 vehicles. We have purpose-built Fleeter for the small fleet owner, and as such, the price point is lower than most commercial fleet management solutions out there, and the pricing approach is streamlined. No initiation fees, no contracts, no extra charges. We have also built it designed for mobile first. We understand that the small fleet owner wears many hats and is often on the road themselves doing jobs. So the app is completely functional, easy to use, streamlined navigation. We're adding customers rapidly for this fleet management solution. It really hits a sweet spot. 70% of this target market is unpenetrated. And there's huge pent-up demand for a solution that is affordable and is easy to use. So we're getting tons of interest on that side. The reason we're here is that we're planning to offer an insurance offering mid-late next year, leveraging our telematics data expertise and our consumer knowledge, and are looking for insurance partners as we speak. So now to respond to your question, we see 2021 being as really the game changer in telematics usage in small commercial policies. And the reason for that is, as I said, small fleets, typically today, 70% of them do not use telematics, are moderately familiar with it and are interested, but there's been huge barriers to adoption, primarily being the price point and usability. And therefore, with our solution and others out there in the market, there will be significant adoption in telematics usage in insurance in small fleet policies. Additionally, with what we're seeing out there is another trigger for increased adoption of telematics and telematics-based insurance is that these solutions can offer a lot of value add to the end user, to the fleet owner primarily. So traditionally in personal lines, telematics has been seen a bit negatively as a big brother approach to watch over people, watch how they're driving, but the exchange has been a price reduction. So you're going to have to put up with this in return for price discounts. In commercial fleets, especially in small fleets, we see a tremendous opportunity to change that discussion and to turn it beyond an exchange for privacy versus price, to make it into a partnership and to add value to the fleet owner. So for example, fleet tracking apps, ours and the best in class offer the ability to provide driver safety scores, driver safety feedback. And so the owner can train and coach their drivers to become safer drivers. They also provide fuel savings opportunities by tracking how much time a vehicle is spent idling. And finally, proactive maintenance schedules. So scheduling oil changes, scheduling other automotive maintenance, and getting alerts on maintenance issues. So in total, we're trying to change this dynamic of privacy versus price, which is an antagonistic relationship, into a value-added, trusted relationship by providing value to the fleet owner. And this is in terms of increasing safety, cost savings, and being on top of maintenance. And we feel that by changing this value proposition, the underlying discussions into one that is more of a relationship value add base, this will create the big tipping point in the industry, starting with small commercial fleets.
Rachel, I don't think you saw the questions that are coming in, but you just teed up one of them quite well. So thank you for that perspective. I want to jump right into the questions if that's okay. And thank you to the panel for the opening thoughts. There's some good provocative thought starters as evidenced by the questions that already are coming in. This one is, let me read this and we'll go around and hear the perspective. Do those on the panel feel that telematics will be a requirement for commercial fleets to procure insurance instead of being an underwriting perk? So Rachel, this goes right to your point a moment ago about, right now it's the trade-off price for privacy. Do we think that it's moving to a place where there's no longer a trade-off to make, this just is the way it is? And are there other drivers in place? And Rachel, you just spoke on it, so we'll come to you last. But Jenny, if I can start with you, and obviously not from the fleet perspective, but with so much activity on the personal line side, do you think there will be a time where this just is the way that coverage happens, or will there continue to be some sort of trade-off where as a customer, you have to give me something if I'm going to be willing to share my data with you?
So the way I'm thinking about it, consumers are really more in looking into savings, and I think they're overcoming this, that it's a punishment in a way. I think they want to get those savings, so they're more free to share their data because they're sharing their data with Google when they travel, right? So why not for insurance? So I think they want to, and while they all think they're great drivers, I think the constant reminder of improving their driving behavior, the whole thing, it's not me, it's people around, but sometimes they start thinking about, hey, may I get more because I'm a safe driver, because I'm in control of my insurance payment. I'm okay sharing this, and I would love to get a better price for it. So I think eventually we'll get to the world that the ones who are not sharing their data will be charged more. In terms of, if I were to think about, and I was thinking about this morning, like if I'm a small business owner, yes, there are tons of benefits to me, but what are the benefits to me as an employee? And maybe Rachel can help me understand that. Like as an employee for working for a small business, how do you entice me to be tracked? What is that for me?
I think we're on the verge of a lot of those kinds of questions for employees, and whether you may not feel like you have any agency or choice or power in that situation, but lots of things that employees do are or could be or would be tracked by a lot of the technology that's coming out. So yeah, it's a very interesting question that will come down the road. Matteo, I just saw your eyebrow raise on that question. I wonder if there's more for you to add on that point, or if you want to go back to the original question. Yeah,
I want to go back to the original question because it's something that I have heard frequently over the last 8 years. It seems a hope of someone that didn't develop a value proposition that is strong enough to be chosen by the policyholders, that hope that can be compulsory. So I have not to sell it to someone. I don't think that will never happen. So sorry, but you have to build customers in personal line and in commercial lines will also always have a choice, a telematics-based policy or a non-telematics-based policy. So you need to use the data to develop and to deliver a compelling value proposition, something that is good enough to convince someone to enroll. So not shortcuts. Sorry.
Yeah. No, I think that's a fair point. Nate, what's your perspective on this?
You know, I love that question. The sci-fi geek in me loves the idea of long views. Where do we as a society give up something, you know, with technology? The provocativeness I have in my answer is this: is if we ever get to a part where there's so much autonomous autonomy in the vehicles driving themselves. I could see a day where if you decide that you are going to manually drive the vehicle, personal or commercial wise, you may have to give up that anonymousness and use a telematics-based product. In the short, medium term, no. There'll always be a market for products out there that don't leverage telematics. The difference is I think you will see a greater and greater delta, kind of like Jenny mentioned, in terms of cost. If you are not willing to share your data, you're going to pay more for that. But I think the better angle here is creating a value proposition that is more carrot, less stick. Can we provide enough services, and this might very well go to Rachel, in terms of fleet and information to those fleet managers that make them want to share the data, not just for that rate, but for the insights, for the maintenance, for fuel savings, you name it. If that's the value proposition, then I think fleet managers and risk managers that are actually buying this insurance will gladly give up some of that data for those capabilities.
Yeah. Rachel, I think Nate's right. That does lead into you, because that's where you're starting from, is the value to the fleet managers. So yeah, I'd love to hear your thoughts on this.
Yeah. So I tend to agree with Jenny that ultimately everything is going to be based on telematics. I think that's just the way the world is going, as Nate said, with autonomous vehicles and Google Maps, and everything that we're doing today is taking us in that direction. The question is, how slowly or how quickly. And I agree with Nate, in the medium short term, there will be a lot of choice. What could really speed up the adoption of telematics, which is good for everybody. It's good for the insurance company. It's good for the owner in the end, both in terms of price and the safety of their fleet, is if we really bring value-added services, if we make it into something that they want to have versus have to have for the price reduction. So the more we can bring to the table in terms of advice and coaching on driver safety, real cash fuel savings. So for example, we calculate that you can save with our app at least $100 per vehicle per month on gas, which is significant in most of these small fleets. And be able to stay on top of your maintenance schedule. All of these are headaches that the small fleet owner faces every day, and they really don't want to deal with. They have a job, they have customers, they have projects they're working on. The last thing they want to do is worry about the maintenance schedule for their vehicles. So this really takes a big burden off of their hands. And with that, you increase, you improve your relationship with if it's coming from the insurance company, you improve your overall relationship with the insurance company. It becomes, less of a transactional and more of a advisor, supporter of the business, which ultimately, we haven't talked about this, but the loyalty and retention benefits for an insurance company of switching from kind of an antagonistic transactional relationship to more of a trusted advisors, those loyalty and retention benefits are probably bigger than anything else we've talked about, right? If you can keep them for a few more years to stay with you because they trust you, that in itself is a home run.
Yeah. Well, so there's a lot of conversation in this last question about the value that we're providing out from the carrier to the insured. And, Matteo, that was the key selection point you made. Rachel, that's exactly what you're talking about right now. Really, everyone hit on this. There's a question here that's asking, besides price, customer experience, and claim service, what other factor or factors do you think a telematics-based insurer or insurance provider should do to innovate and differentiate their product in a space that's quickly becoming commoditized? I think that's an interesting one, that a lot of carriers do run on the same 3 or 4 providers of the telematics solutions on the personal line side, and obviously there are providers on the commercial side too. So what do we need to look to as the way we create that value and extend it out to the market? Nate, can we start with you? Because I know you've also looked on the data side and the rating and modeling that you were speaking about before. Is it something in there, or is there something completely different? What do you think about how we can create more value for the insured to have a compelling and differentiated product?
Yeah, I think, I mean, the challenge of the question is they've named kind of the big pieces already, right?
Yeah.
You know, price is king. I mean, we can talk about the other aspects, and that they definitely have impact. But what we always hear back from our clients, which are insurance carriers, and their clients, which are those fleets, is that price is a critical component. So you can't get away from, you know, how can you use telematics to charge a better price? Not just for charging a cheaper price for good risks, but charging, you know, a higher price for those poorer risks and moving them to your competitors. That is the big differentiator of telematics. In terms of the other services, though, that's where the stickiness really comes about. If this is a commoditized marketplace and everyone's offering that value proposition, it's what is the best way to package those other services to create that stickiness with those clients. I think Rachel with Fleeter would probably tell you that the stickiness will come from the fleet data that they give back to the risk manager and buyer in terms of how to best use your gas spend, your vehicle spend, which is different in terms of maintenance, to have better routes that are not just safer, but get more deliveries, more cars picked up, whatever your business is. Every one of those little elements that can improve the underlying business will create the stickiness that will keep that client with the carrier. And that if the price no longer is a differentiator, once you kind of go through that first, okay, I'm giving up the data regardless, those are the parts that really become the more valuable piece to this value proposition.
Jenny, personal lines, do you think that there's a different piece of the puzzle here or a different place to innovate on, or does it boil down to, you know, as the person asking the question sort of named the big ones, as Nate said, is it that simple, or are there other ways to look at providing value?
I think I'm probably in the camp of offering additional value propositions, and with Nate, that where we haven't talked about peace of mind, giving people peace of mind with telematics, connecting it to claims, taking care of customers. And I think it's extendable not only to personal, but commercial. This is what, as an employee, I was thinking, hey, my company is offering me additional benefit. I'm strangled on the side of the road. There is a opportunity for me to be picked up by a car in case I'm stuck or I had a flat tire. So roadside services, as well as emergency services if I got into an accident. So I think those type of use cases are extendable between personal and commercial. And this is where I think as a customer, either personal or commercial, they will see it as additional benefit that my insurance company is providing to me.
So sort of proactive delivery of additional services rather than waiting for a customer to have to ask for it.
Exactly. So that would be something that delights customers, not just being like Big Brother watching for you. So that's a trade-off. That's what happens today, right? And that's what customers want.
Yeah. Matteo, I'm interested in your view on this, and there's a question to you specifically that I wonder if we might wrap into this one about when you talked about the pioneer days of the connected car from the OEMs building a partnership with the carriers, if there's some secret sauce for that to be successful. So maybe differentiating between the add-on, you know, the OBD2 port kind of thing or an app versus when you're talking about a connected car. Is the story the same from a value add standpoint?
I try to answer to both the questions together because some way they are linked. Yeah. So I think that the aspects highlighted by Jenny are great. It's true that both in personal line and in commercial line, the opportunity to add services is relevant. There are experiences around the world on personal line that are charging more than $5 a month for the kind of enhanced roadside assistance based on telematics data. But there is more. There is more that as an insurer, you can use this data to improve your claim management process. You can introduce a proactive first notification of loss. You can use the data to adjudicate the claims, to support your investigation about the claim. And on auto third-party liability, these mean millions of savings for some best practices around the world. But the telematics data can be used to reduce the risk. There are a lot of behavioral change programs that are incentivizing the driver a free coffee if you are driving well. But they have applied this not only on personal line, but also on small commercial. There are some insurers that on commercial auto are using in US, are using the data that come from telematics to enhance the activity of their loss control team. So when they go to discuss about safety with the fleet manager, now they have objective insights to discuss about. There are other insurers that introduced ADS solutions, so they try to avoid the accident. So an example, the Mobilize solution. There are others. Recently, Nationwide made a partnership with Samsara that have the camera that detects if the driver is distracted, and a platform that can dispatch real-time alerts to the fleet manager. So all these examples show that you have a chassis of use cases. Pricing is one, services is another, but you have other 14 services I mapped in the research I'm doing with the IoT Insurance Observatory, and I'm discussing with the members weekly. All these use cases require good data. Frequently, why you use a specialized solution? Because you need a solution that delivers the data that you need for this approach. If you would like to build an approach against distraction and you need a camera, you need a camera. You cannot do it without with the data that come from the truck. So the point is, based on the use cases that you would like to develop, you can find the right technology. So going to the partnership with OEMs, today, the only reliable data from OEM is the number of mileage. All the insurers that I discussed with that try to obtain data from OEMs discovered that, first of all, they are greedy. So they charge you more than what is today paid for an aftermarket solution. Yeah. But then inside each OEM, you have 10 different standards of data. The data are less consistent than the device that you develop or someone developed and sold to you, yeah, that fit with your specific needs. So if you are looking to the mileage, any OEM provide you the data that you need. No doubt about it. Maybe the next generation of cars will have better data. Maybe in a few years, OEMs will be less greedy, but it's not the reality today.
Yeah. Well, it sounds like it's not if we're talking about 2021 as the main focus for this is not a 2021 issue. Back to your original point, it's sort of 5 years, maybe beyond that it starts to get more clarity on the connected car side.
Then you have another opportunity with OEM, that is to have them sell policies. This is another game. OEM says a distribution channel. Even here, there are great projects that have started recently. There is a new wave of tentatives around this. Even here, if you exclude Denmark and Norway, that are the only two markets around the world where car dealers represent a material part of the policies sold in a country, we have not yet seen success stories. So I have not the answer for the question we received. I'm curious to see if this new wave of tentatives to have an OEM to sell will succeed. So I'm looking forward to understand what are the elements that are necessary to succeed. I've seen a lot of elements that driven failures.
Yeah.
I'm still waiting for the success.
Yeah. No, like it's very interesting. And I should say, having done a bunch of these webinars, this is a higher number of questions and really cutting questions. These are excellent questions coming in from the audience because this is a really rich conversation. Rachel, can you bring us together from a provider who gets to see the data, gets to see the usage, is watching what's happening and how it can be used? What are you thinking on this question of where can we add more value?
Yeah, so we're sitting at a really interesting intersection with the small fleets, right between personal lines, because these are very small policies, and large commercial fleets. And the interesting thing about this niche or the segment that we're looking at is that the owner, who is the owner of the business, who has everything at stake, is the one that we're selling to and talking to. So, but yet they are not the driver. So in personal, you've got the driver being the owner of the policy. In large fleets, you typically have the telematics, fleet operations person who's not the one on the line to paying the policy. So we're talking to a segment where, the policy holder is not the driver, but yet they're monitoring the fleet, and they've got a lot to gain and lose, both financially from a premium perspective, but also from the value add. So it's a really interesting segment to be in because you can really talk to them about all of these topics at the same time, whereas in larger fleets, it gets fragmented. So the value add that we're talking to them about is number one, driver safety. So the ability to look at how your drivers are driving, get notifications and know exactly when they're speeding, when they're accelerating, when they're at risk of dangerous behavior. So all of those, get it to the owner in a streamlined way through notifications or alerts. That's number one. And the result of that is that they sit down with their drivers and they have a frank conversation and coaching. So you can immediately change driving behavior based on that. The second one that I talked about is fuel savings. One of the major source of wasted fuel is idling. And very often drivers will sit in their vehicle in the summer, lunch, AC on, waste a tremendous amount of fuel. So all of that, the owner can know about and track. In addition, after hour usage, so people using the vehicles for personal use as opposed to commercial use, also mileage issue. And then finally, I discussed a little bit about maintenance. So there's two aspects of maintenance. One of them is getting everything that relates to maintenance on a proactive schedule. So when you have to bring it in to do X, Y, Z. And the other one is getting alerts when engine codes pop up. And that's the advantage of using the OBD device. So all of these are things that we find our owners really interested in, happy about. That's where they get most of the value from a fleet management solution. And even more so in the small segment, because it is directly the owner who can act on these suggestions.
So really is moving into holding the value of the asset, managing the value of the asset, and not just about transferring risk. We have a lot of great questions. I'm trying to group some together so we can hit multiples at once. So I'm going to try to do this on two that I think are interrelated. They both talk about analytics and data. So one of them is, how do you think analytics would play a role in commercial fleet insurance, or obviously personalized as well, given that use-based insurance and the tools behind it have been slow to be taken up, which has changed a bit in the past few months, but still on the whole is not the majority. The other question is asking how prepared carriers are, or the industry is, to leverage all of that telematics data. And are we ready for it? But also, are we ready for the potentials around things like dynamic pricing and being more responsive to really real time knowing what the exposure is and matching the coverage to that exposure? and what barriers might stand in the way to that. So two interrelated questions around analytics and data, our readiness for them, and what we could potentially do with them. Jenny, could you open us up with some perspective from personal lines?
First, I think those are great questions. I think that's what insurers have to strive, because if they don't, like, we will be behind. We need to get better management of the data. We need to get better tools to be able to interpret the data. And we need to take steps to move us forward to dynamic pricing. We certainly are not there yet, but if we not, we need to start learning about those tools, and they're around. We just are slower in our ability to get to them. But that's the goal, that's the target, and I bet American Family is not the only one, and all insurance carriers are looking into this. So it's a great question. It's a challenge, it's an opportunity.
Yeah. No, Nate, you brought this up actually specifically, thinking about the modeling side and having the right risk and data models. So what's your perspective, given that this is something you've directly been talking about and thinking about?
It's a great question, particularly the second part, in terms of, we have this great data through telematics devices, but what do we do with it? And Swiss Re has its own telematics offering. We have partnered with carriers around the world to help them start a telematics offering. And the biggest challenge and the biggest value add we feel like we offer there is the rating part of it. You get this data, but what do you do with the data? What does a good driver A versus slightly better driver B, what should the differential be in terms of their risk and thus to the rate that they're charged? That's one of the biggest challenges, I think, for a lot of carriers is, okay, I have a shiny telematics product now, but do I really know if I'm charging the right amount for that good driving? Am I looking at the right factors? And I think we're making progress there, probably more so on the personal side, where it feels like a little bit more mature than on the commercial side. But I see that as the biggest challenge for a lot of carriers is, as we partner with telematics providers, as we try to incorporate the ADAS systems into our rating, are we doing it right? There's probably no way around it. We have to have some trial and error. We're going to make mistakes, but that will be a big challenge for commercial carriers in this space for the short and medium term, is tweaking that the right way, learning from the mistakes, and getting a rating method out there that really does leverage as well as possible truth. And I say truth in terms of what that driver really, really is doing against what we think they're doing based on the data that comes from the car and the telematics device.
Yeah, no, it's a great point. And I think truth is probably in quotes, right? We sort, Matteo, to your point about the data before, the access to it, the consistency, the quality, that's part of why I feel like maybe truth isn't, we're not at the point that truth is genuinely truth. What's your take on this analytics and our readiness for it, state of the market?
Let's say that is true what has been just highlighted, that on personal line there is a higher maturity level, but on personal line we have, let's say, between 5-8 insurers around the world that today have millions of policyholders in their portfolio, generating data daily. So when I'm talking with these insurers, I have in front of me organizations that have skills, tools, and develop a lot of intellectual property around the driving behavior of their drivers. Many of these insurers have even internalized that kind of competencies. So they are not relying on this analysis of the risk, the activity of a telematic service provider. So they decided that they have a telematic service provider that maybe is helping them on the data gathering, on the evaluation of the driving behavior, but then the correlation between the driving behavior and the claims data, so the development of the new risk model, is done internally. And they are working on granular data. So it's true that it's not the market average, but we have already examples of insurers that develop the capabilities to manage these analytics. On the other side of your question, instead, I have a mixed feeling about the continuous pricing, the dynamic pricing that you mentioned. So I think that if we are talking about continuous underwriting, saying I would like at the renewal to use the data to take underwriting decisions, I have seen successful stories. I have seen insurers that modified their underwriting decision, even on commercial line, based on case by case, what they are observing, even deciding to change their reinsurance policies, reinsurance approach about a portfolio based on what they see as real risk level. Opposite, I think that dynamic pricing today is a buzzword. Dynamic pricing is something that is good to present at an actuarial conference and having everyone that clapping their hands. Great, but concretely, go to sell a policy with dynamic pricing. Find me a policyholder that is interested to have a policy with the price that is not defined up front and move.
Yeah, it's been tough to have success doing that, for sure.
Good luck.
Yeah.
So I think that my approach to innovation is to be concrete, to create things that can generate a value. So if technology allows you to do something, you are not obliged to do it. It has to make sense, to provide a positive return on investment. So if you are not able to sell it, probably is not the best area to invest on. Yeah. Instead, on continuous underwriting, on selecting the risk up front, on defining a pricing at renewal, or taking other underwriting decisions, or even adjusting your insurance policy, I've seen concrete success stories.
Yeah, no, that's great. Rachel, you're seeing so much on the data side in lots of different aspects of the exposure. What's your take on this from an analytics standpoint?
Yeah, I think quite frankly, we need to realize that we are really at the baby steps of this whole proposition in terms of underwriting based on telematics. We are still at the stage, for the most part, of underwriting based on self-reported data. So just taking at, the first step where we can use telematics is changing that dynamic and underwriting based on actual data, like actual miles driven, actual garaging location, time of day. There are a few preliminary initial steps that we can take to improve the accuracy of underdriving that will just take us through the first step. I mean, ultimately, the goal would be continuous underwriting, would be underwriting based on everything that telematics has to offer. So distracted driving, minute accelerations, road driven, etc. We have the capability of doing that, but that's far off, and we have to take the baby steps to get there. The first steps are just to take what we're doing now, in my mind, to take what we're doing now and convert that to real data versus self-reported data, which telematics can do very easily, and would be, it's really the low-hanging fruit in how we do underwriting today. Take the self-reported data and convert it to actual observed data.
Great. And look, we're getting tight on time. There's still 18 unanswered questions, so we're obviously not going to hit them, and they're really, really good. These are very interesting questions. I'm going to do a rapid fire one because that's all we have time for. COVID was an unlock in a lot of ways for UBI because all of a sudden people were driving less on the personal line side, and they wanted to get credit for that, right? So those discounts suddenly seemed attainable. If your car is sitting idle for 3 months, that's a great time to have your driving habits observed. And on the fleet side, suddenly people are delivering packages more. They're getting into these things in ways that they haven't before. So their desire to understand maybe has changed. I'm wondering if, we've had the COVID influx of UBI. We've seen the impact of it, and maybe there'll still be a tail to more of that. Is there something else you see on the horizon that could be another shift or unlock kind of tipping point where instead of being, to Matteo's point before, lots of discussion, but not necessarily the biggest component of the market yet, to where actually the adoption is quite high? Jenny, start with you. For American Family, is there a tipping point moment or a particular thing that you're saying, if this happens, we expect a big shift?
I'm somewhere with Nate. Nate was alluding to before about safe cars. I mean, that maturity of the fleet and increasing number of cars being connected equipped with safety features, I think that would be one of the driving moments for carriers to realize, how can we start getting that data? And I think while I understand that dynamic pricing may be far off, I think for insurance carriers realizing how to get the feed, ongoing feed, not just at the point of sale feed or at renewal feed, that would be an interesting opportunity, the way I would look at this, to start engaging into that and looking into this.
Oh, that's interesting. And Nate, I don't know if Jenny gave your answer for you by calling your point before, but do you still feel that way, or is there?
I do. I mean, there's a couple different things playing out here. So you mentioned COVID. So COVID will tail off, but it will tail off into a new normal. And we've all kind of talked around the issue of driving behavior may very well change long term when COVID is well into our rearview mirror. But there are other things out there. The technology in the vehicles will allow for improvements. Right now, the auto space, we're seeing carriers increase rates to address those inflation issues that I mentioned at the beginning. At some point, we will get to adequate rates, and those same carriers will start looking at rate decreases. And the question is, can we use telematics-based products to give smart rate decreases to those insureds that are deserving of it, and move away with by not providing those rate decreases to those insureds that don't deserve it? That's kind of the bellwether moment for telematics. The carrier that can figure out a way to leverage telematics and ADAS-enabled risk scores into their products will make the better decisions on how to adjust their rates when the rate increases we're seeing today start to tail off. And that, your guess is as good as mine when that happens. Hopefully for a while yet, but at some point it will, and that's where telematics will really provide a lot of value to me.
Yeah. Matteo, is that your feeling as well, or do you have a different outlook on things?
So I would like to, first of all, to reinforce the last message of Jenny. I totally agree that insurers need to work with real-time stream of data. There are a lot of use cases from the claim side, the service side, that require, or the behavioral change that I mentioned before, that require to deal with real-time data. So it's an opportunity that is extremely relevant and allow it in other business lines, not only on auto, to leverage this data to create stronger relations with the policyholders and achieve higher retention on this book of business. So this point is extremely important. The experience that I've seen is more on personal line. So I'm looking forward to see if the effect is similar also on commercial line. But as the last message I would like to give to our audience is that is more providing adapt to think about than an answer. We talked about COVID boosting telematics. I'm not so sure about. If you go to look at the two largest US telematics portfolios are on personal line are two listed companies. So you can go to see their earning calls. These two players was already successful on telematics. Honestly, their sales has not increased a lot. marginally. So it's not changed for the success stories, the world before and after COVID.
Yeah.
This is something to think about.
Yeah. Well, and Rachel, living on the front lines with the telematics solutions, what are you seeing, and where do you think the pivot? What's the tipping point in your eyes?
The tipping point is where we started this conversation initially, is changing the perception of telematics as an exchange of privacy versus price to a value-added relationship where telematics can provide insights, improvements to the business, and real trust and a valuable relationship to the fleet owner, where they look to telematics to improve their business and see significant business improvements from the telematics solution versus an adversarial relationship.
Yeah, I think it's a great point to end on. Look, this has been really interesting discussion. I honestly have not seen the flow. Even after I said we don't have time for any more questions, we still got 5 more. So it's obviously something people are interested in. Great questions, great discussion from the panel. Thank you to everybody for participating today, and thank you to Reuters Events for putting this panel on. Thank you all.